Good morning, guys. This is Angelina here. Here it's 11 a.m. here in Singapore. Can you guys maybe say a quick hi so that I know that y'all can hear me? Hi, Japinder. Nice to meet you. It's a new face. I see a lot of loyal attendees. Feel free to say hi or just let me know if my audio is clear. Hi, Setiong. Nice to see you again. Let me just wait for a while. There's a lot of people coming in. Feel free to say hi or tell me if there's anything I can do to adjust my volume. Okay. Morning, William. Nice to see you again. Okay. Volume is good. Nice to see you, Yok. Hi. Hope you had a great day yesterday. Okay. Okay, so for today, we'll be going through the Ichimoku Kinko Hyo. I don't know if you guys have actually heard of it before. So today I will be presenting on it. If you have any questions halfway about how it works or to clarify certain stuff, feel free to drop in a question, and when I see it, I can answer it directly. Or if you feel like you want to see how it's going to apply to actual trading strategies, after my presentation, I will actually do some demonstrations of how we can actually use Ichimoku to find the support and resistance levels, and it can help to support what you think the price might react at. Okay, so let's get started. So Ichimoku is actually an indicator, and in this webinar, we'll actually learn how to calculate it and how we can use it to interpret its signals. So I don't know if you all know that Ichimoku is actually made of five different types of lines. And there's the first one is called Chikou span. The second is called the Tenkan. Then there's the Kijun, and then there's the Senko span A and Senko span B. So it's actually developed by this guy called Goichi Hosoda, who is a Japanese journalist, and he wrote it under his name Ichimoku Sanjin. So he developed this charting technique or tool and offered it to the public when he published the book in 1969. And people use it because it's a very versatile indicator, and usually it will define the support and resistances and identify trend direction. Some people like it, some people don't. People who like it says that it's very comprehensive. It includes the simple moving average, the previous prices 26 periods back, and it provides sort of quite a clear momentum for the people using it. And it also provides trading signals for the traders. However, I don't know if you all attended Isaac's seminar. So Isaac's view is that there is a lot of different signals given by the Ichimoku. So it can be a bit confusing as to which one to follow for a beginner. So later we'll show you how to actually simplify the Ichimoku to make it easier to interpret and understand and more straightforward. So Ichimoku is translated as a glance or look. So you can see at one glance that and the Kinko Hyo is translated as the table of equilibrium. So Ichimoku is like you're just saying, oh, at one glance, I know the equilibrium or the averages of all of this price of the charts. So with one look, the chartist can identify the trend and look for a potential buy and sell signal. Okay. So usually with the Ichimoku, the default is that we will use 3 key periods to calculate it. Okay, so one is they may wish to, some traders, they choose to alter the time periods because they feel like, for this chart, I feel that this simple moving average might fit the charts more, the price turning points more. But most traders will feel that the default periods are okay. Personally, I also do not change the periods because it can get quite confusing. There are 5 different lines. If you have to change each of them, then how are you going to make sure that all of them are in alignment? So by default, we use 3 different types. So these are the 3 different types. The first one is 9 periods, which is 1.5 weeks. About you will see about sometimes they'll change to 7.5, but by default, if you use trading charts or you use trading view or you use the default charting tools, they will put it as 9 period. And you'll also use 26 periods, which is 1 month, or they can actually change it to 22 periods for some, but usually the default will be 26. If you look at it, we will show you later. And then and the third period is 52 periods, which is about 2 months, 44 period. So guys, I have a question. Do you know why we don't use 30 days? We use 26 days for 1 month, and we use 52 periods for 2 months instead of 60 days. Can anyone make a guess? Just try. Uh-huh. Okay. Weekends? Whoa, yoke. That's quite smart. Yeah. So 26 is about the trading days to cover all times of Usman. Good try, good try, good try. Okay. So yoke is actually quite close, quite accurate. So it's because 26 is the trading days we take for 1 month usually, and then give or take, there are certain charts that trades 20, 24. There are certain charts that trades 30 periods, certain asset that trades 30 days, certain assets that trades 22 days or 24 days. So it's about on average 26, and it's 1 month. And also if 26 times 2 is 2 months, so it's 52 periods. So that's the reason why we use 26 and 52. That's very good, Yoke. Usman, also good try. Yeah, that's the reason why we use these 2 numbers. Okay, let's go on. So how is the Ichimoku plotted? As I mentioned, the Ichimoku have 5 different plots. Okay, so there's actually 5 different plots. I just now mentioned that one is called Tenkan, and then there's one that's called Chikou span, and there's one that's called Kijun sen, and there's one that's called Senko span A and Senko span B. So would you all like me to actually spell it out for you guys? Okay, let me write this down. Okay, so how you write is actually Tenkan. Pardon me for the ugly handwriting. Tenkan. Oh, Tenkan sen and Kijun sen. Okay, this is how you spell it. So these 2 actually, we can see later, is actually the SMA. So simple moving average based. So one is a shorter simple moving average, and one is a longer simple moving average. Okay. Then the third one is actually the Chikou sen. Cool. You all can write this or remember this down. So this is actually just the original price chart projected 26 periods back. So this is actually just called a lagging span line. Oh, this is so hard to write in. Okay, let me try. Lagging span line. And then after that, you have Senko, span A, and Senko, span B. So these are the 5 different span lines that you actually see on the Ichimoku, which I will show you later. And how we actually calculate this is, so for Tenkan-sen, we actually use a default of 9 periods, and we'll add the highest high and the lowest low of the last 9 periods, and we actually divide them by 2. So the highest high and the lowest low are the highest points and the lowest values of the specific number of periods. So in the 9 period, what's the highest price, what's the lowest price, and then you plot one price point there. And then this is how this span line comes about. So for Kijun, this is a longer SMA. So it is 26 periods. And this is the same as Tenkan. How they calculate is the same, except we use a 26 period. So you can see that this is the cross of a longer SMA vs a longer SMA, which is the Kijun Sen, vs a shorter SMA, which is a Tenkan Sen. So this is how these 2 lines come about. So you can take note of that, and in the future, it'll be easier to remember. Do you have any questions so far? Okay, good. Yeah, so Kijun Sen. Okay, let me clean this. Okay. Okay, so thirdly, there is a Senko span, and the third and the fourth is Senko span A and Senko span B, which if you remember from what I wrote down just now. How it's calculated for this third and fourth Ichimoku plot is that Senko A will use like a 52 period, and they'll add the 52 Tenkan Sen and 52 Kijun Sen divide by 2. So for Senkan span, you can see that it's actually built on the previous SMAs that we calculated, and it just takes the 52 periods. For Senko span B, we will actually use the highest high plus the lowest low and divide by 2. So A is actually taken from the Senkan and Kijun, and B is actually, we use the 52 periods, but we take the highest high and lowest low of the 52, and then we divide by 2. And usually for these 2 periods, we actually create this thing called the kumo, or Japanese called the cloud. So later you'll see there'll be a green cloud, there'll be a red cloud, and the clouds are actually telling you sort of the momentum of the charts. Yeah, so plotted 26 periods in the future and their differences forms the kumo. And the span A will form the faster cloud boundary, and the span B will form the slower cloud boundaries. So what it does is, so these two for, let me write this. For these 2 span, you actually see if there's a line here and there's a line here. So one will be plotted either green, so maybe I can write green, and one will be red. So this is what you call the kumo, which is the cloud. Usually for red, it's sort of signaling that we're entering a bearish momentum territory, and for green, it's actually a bullish momentum territory. So the clouds can sort of, at first glance, tell you that what momentum the chart is. But however, indicators are always lagging because they are based on the previous price action. So Ichimoku can be a very good supporting indicator, but we should always never take this as a sure sign that it's always gonna be a bearish sign or a bullish sign. Okay, and then so moving on, the last plot, the last line, which is called, it will be called the Chico span. And the Chico span is actually just the exact same chart in line that is projected 26 periods back. And like we said, the default is actually 26 periods. Yeah, so this is how these 5 lines are, we will come about with these 5 lines. So let me clear all the drawings and then we can move forward. So an example. So first, how this Tenkan-sen is plot is we'll look at the plot on the graph. Then the Tenkan-sen is usually the one that is closest to the price. And then we'll have the Kijun-sen span. So the Kijun-sen is actually the one that is here. So it will have a crossover. So one is the longer moving average, one is the shorter moving average, and then you'll see a crossover. So usually, you didn't share your slides. Let me check. Michael, can you see your see the screen right now? Can see now. Thank you so much, Michael. Thank you, Usman. Okay, so I'll continue. So for Ichimoku Kinko Hyo, so these 2 SMA for Tenkan-sen, the red one is actually, let me go previously. So the red one, Tenkan-sen is actually here. And then, sorry, okay. So then you see the Kijun-sen. So these 2 SMA, they'll cross over. So you can see that for these 2 cloud, so this will usually be the cloud Kumo that we referred to just now. So it will be usually covered. If this is bearish, most probably this will be red. Michael, restart. Stop since you start. Can you restart? Okay, I would actually, let's clear this. I'm sorry, guys. Let me restart from the previous slide because okay. Michael, did you see this slide just now? Yes. Okay. So maybe I can continue. So the Senko span A is the one that forms a faster cloud boundary, and the Senko span B forms the slower cloud boundary. So span A is usually a faster indicator because it's plotted on the previous Tenkan and Kijun, and Senko span B is usually plotted of 52 moving average, the highest point and the lowest point divided by 2. So these 2 intersection actually forms the cloud. And just now what I drew was I drew a line and drew a line. So usually if the cloud is red, it will sort of tell us that it's a bearish momentum, indication of bearish momentum. And if this cloud is actually green, it's sort of signifying to us that it's a bullish momentum. Okay, so something that I think is not on the slide is that you have to be very careful when you use the Ichimoku, because sometimes you see very thin clouds and sometimes you'll see very thick clouds. So for thin clouds, it means that actually the moving averages are very close to the current price. And if price has a very easy tendency to break through the moving averages to cross over to the bullish or the bearish side. So even if it's red currently and if it's but it's a very thin cloud, there might be possibility that it might cross over very soon. And as I mentioned just now, indicators are lagging, right? So the next momentum might be green, or it will be very hard to foresee it. But if it's a very thick cloud, then it will show very strong bearish or bullish momentum. Then we can use it further to confirm what we think that next price action is. So I hope this will clarify what I said just now. So let's move on to the next slide. Okay, so Ichimoku plots. So the first, the older sun is Tenkan-sen. And then we'll see this red SME line, which is very close to the price action. So our second sun is called Kijun-sen. And then it's relatively less, it's a more average outline, SME. And you can see sometimes it's crossover. So the crossing over part, so this part, as I said, is where you actually plot the clouds. So you can see most likely this part will be bearish or it will be red. So most likely if they plot a cloud, this will be red. And because this is actually a bullish, so you see an intersection here. So this is like, if this is green, we know that most likely this is an upward momentum. And this is a bullish sign, the sign that market structure is changing to a bullish. Okay. And then, so our third sun will be called Senko Span A. So these two are actually twins. So Senko Span B. So these are actually, okay. So these two also have a overlap. And then this two is actually projected based on a Tenkan-sen and Kijun-sen. So this will be the cloud that is red. And then this will be projected in the future that is green. Okay. So the last sun will be called Chico Span. And this is just this charting line that is projected 26 periods back. So it's actually the exact same line. I'll show you later on the trading chart view. That is actually the exact same line as the price action. Okay. So Kumo. Kumo is the cloud. Okay. And the area between the two span is the Kumo. So let me give me a moment. Okay. So the trend is down when the clouds, when the trend is down when prices are below the cloud. So if the price is below the cloud like here, and then it's sort of showing that this is a bearish trend, downtrend, and if the clouds are actually inside of the price is actually inside the cloud, is sort of showing that prices are trying to break through this thick cloud and going to the bullish market structure. So the trend is up when the clouds actually break over. So if you can see here is the market is making lower highs, but at here it's actually inside. So it's sort of a sign that the market structure is changing already. Then we can see here has higher lows. So when the prices are inside the cloud, we can use it to sort of support what we think if the market structure is changing, and then it's going to an uptrend. And also we see a green cloud here, Kumo here, which is saying that this is a bullish market, possibly a bullish market. So as I said previously, the cloud thinness, the span of the clouds also matter, because if it's a very thin cloud, then prices might only hit here and might still go down. So if it's a thick cloud, if price is in this cloud area for a very long period of time, it's a stronger signal that the market is changing direction. Okay. Let me move on. Okay, so this is uptrend. Okay, so the interpretation of Kumo is based on the color, and it gives us an indication about the strength of the trend, like I said just now. Then if the downward trend accelerates, so if say the span A falls below the span B, this will be when it produces a red cloud. So these two are actually plotted on the Tenkan and Kijun simple averages, right? So if one is slower than the other, and then there's a then we will see a red cloud. So if the A is slower than span B, then we see a red cloud. When they cross over, it will show that the uptrend is strengthened, and it will produce a green cloud. So because the cloud is shifted forward 26 days, it will actually sort of show us the support or resistance levels. Okay. So we can actually tell the Tenkan vs the Kijun. The signals of Tenkan Sen and Kijun Sen, as I mentioned previously, can also tell us different things about the chart. So a bearish signal is generated when the Tenkan Sen crosses below the Kijun Sen. So you can see that if the SMA of Tenkan crosses below the Kijun Sen, and then it's actually a bearish signal, whereas at here, if it crosses above the Kijun Sen, it's actually showing a bullish signal. So I have to change this. Okay, so this is actually forecasting a bullish signals. So the Tenkan and Kijun, like I said previously, the SMA crossovers are also indications of when the market trend, the market structure changes. So, but usually the simple way is just to use the Senko span A and Senko span B to actually observe the color of the plot of the Kumo, which is the clouds. Does anyone have any questions so far? Okay. So for Tenkan and Kijun Sen, we'll also use them as support and resistance. So they can also show us where we can find good levels to actually spot our entry or our take profit levels. Okay. So let me actually remove this. Okay. So for the Chico span, the last one, Chico span, is actually just the exact price chart in line form plotted 26 periods back. So I don't know if you guys actually seen it before, but I'll show you later. It's actually just to show you that when Chico span is below the prices, the trend is considered to be bearish. And when the Chico span is above the prices, the trend is considered to be bullish. So for many traders, they will use the Chico span as a crossover with the price as a buy or sell signal. So these are the 5 different spans for the Ichimoku. Do you guys have any question with regards to how this can be used? Okay, so would you like to see the Ichimoku actually being used on actual graphs? Do you have any requests? At which point is the selling? Okay, so let me show you actual. So as I said for you, Michael, the crossover of Tenkan and Kijun actually generates selling or buying signals. The problem with Ichimoku is there are quite a lot of signals and you can find quite a lot of levels from it. So for the clouds, so for Ichimoku, you can use the cloud to determine whether it's a upward movement or downward movement, whether you want to long the market to ride with the trend, or you want to short the market based on you think that there's going to be a bearish breakout. So that's for the Kumo part of it, the span A, span B crossover. And if you see the cloud changes from green to red, and then the price is sort of crossing over, it can be a signal that the market is going down after this, and you might consider to observe the reversal before you actually sell off. And then also for the Tenkan and Kijun, which is the longer moving average and the shorter moving average, we see a cross just now. Then if say like I mentioned previously, so for here, this crossover can be a signal where, hey, the market is going down, so we can actually start selling off. Or here can be saying that market is going up, so potentially we can actually ride the trend to actually buy in and go long. So Michael, I hope this answers your question. Okay, Louis requested for gold. I will actually go into gold after this. Okay, so let's go into okay, so let me go into gold and let me actually show you how you can use it to okay. So this is actually gold. Wow, Lewis. We actually came in and I was actually thinking people will request for gold, so I prepared for gold. Okay, so this is what you will see on TradingView if you're doing charting. And the default setting you can see is 26, 52, 9, the conversion line, the periods, 3 periods that we mentioned just now. Okay, and then for Ichimoku, there's a lot of different signals. So so for the conversion line, so the conversion line is actually the Chico which we mentioned. So let me take off all first. Okay, clean all. Okay, so this is a clean one. Okay, then we have the conversion line. Let me remove this. Okay, settings. So okay. Oh, okay. So sorry, I'm sorry. So the conversion line is actually the Tenkan. Okay, conversion. Okay. So actually the Chico is lagging span line. You can see for Chico, and this is actually the line graph of the gold. You can see actually it's the exact same graph, just projected 26 periods backwards. So this is how you know that this is the Chico line. And if you want to note it down, this is the lagging span line setting on Ichimoku. If you're using TradingView, okay. And then the next one is actually the conversion line. Okay, so conversion line is actually what we call the Tenkan. Okay, so this is the Tenkan. And for the baseline is the Kijun. So this is the two SMAs that we talked about just now. So remember when I say that there's a crossover, so you can see here, it's actually generating a signal. So for here, you see that there's a crossover, then price goes all the way down. Okay, so it's sort of like a signal for us. And then we can actually put two levels here. So if you actually go through here, you can see that the selling signal is very strong and it goes all the way down. So this is how you can actually use the two, if you just want to observe these two lines, the two SMA, to actually do a sell-off. Okay, and then if you look at, so the crossover of these two lines are actually levels which you can observe to put in an entry or to actually sell off. Okay, so but for us, if you don't want to rely too much on indicators, usually what we do, a simpler version of how to use the Ichimoku, is we just use it to observe the market structure. So you can see that the span A and span B actually plots the Kumo, which is the cloud. Okay, so when you see a green line, you can see that actually is a very strong uptrend. Okay, if you want to write the clouds, so you can actually see here's the intersection, right? And then this is a buying signal. So this is where you can actually buy in, buy in, buy in. And then you see that actually price. So here can be a potential target. So you see a crossover here. The clouds will actually give you an indication of perhaps the market is changing structure and you should start to take profit here. So usually take profit, enter trade. So if you don't want to look at the Tenkan, the Kijun, the two SMAs, actually the span A, span B, and if you just plot the area here, so span A, span B, is a very good indication of the market structure. So, okay. Does anyone has any questions with regards to how to use the clouds? Luis, I can actually do analysis for gold based on technical, if you would like. Okay, so the problem with Ichimoku is it provides too many signals. So for us, we only use it as supplement, as technical analysis to do our analysis. Of course, graphical price action always precedes before whatever we do when we look at analysis. So if we look at gold, I'm on the 4-hour chart. I see a very strong bearish momentum here, and the Ichimoku cloud confirms that this is actually going in a bearish trend. It's a very, very strong downtrend, right? So we can see that the lowest point previously was here. Okay, so this can be a level that we watch out for. So those people who have been shorting, this would have been a safer take profit area, which you guys, if you all went in entry here, where the price actually touches the Ichimoku cloud previously, you have made a very decent profit, I would say. Okay, so if you have, let me sell entry. Okay. And then you can write with the clouds, go in here. Graphical price says that in history, price has dropped to this level. So this would be a safe take profit previously. So right now, the question is that if you would still want to ride the trend, would this be actually rebound? So I actually think that, okay. So I actually think that price may go to this level. This is a level you might want to watch at because price have tested this, bounce up, and then price actually have reached here but go down. So this is actually a good level to watch at. And if I draw a Fibonacci from here to here. Okay, it's actually very, very close. Start here. Okay. Okay, so it's actually very, very close to our 61.8. Okay. And if price goes up, it might bounce even further downwards. But right now, the markets are not that clear yet. So this is a level that if you want to watch for a reversal, this might be a good level to watch for a reversal further down. Or if you want to take a profit, if it surpasses this level, then that might be a possible breakout in play. We do not know yet. So I would say we should actually observe the market more for more indication. And the clouds are signifying bearish momentum. But as I said, this is a very thin cloud. It's not thick enough to support that, hey, to give very clear indication that it will not break the cloud. So we have to see after the rebound whether it will go within the clouds, whether there will be a change of market structure before actually any entry or potential sell-off. So do you all have any questions regards to this? Anyone has any more requests? Can look at oil? Sure. Okay. Sure, Louis. You want WTI or do you want UK gold? WTI. Okay. Okay. So US oil. So you can see for oil, if you have Ichimoku on default, which is the simpler span A, span B, straight away we can tell that it's actually a bullish momentum here. Previously, here is the bearish momentum, but at this point, price sort of change, and you can see that sometimes Ichimoku gives very, sorry, where is the line? So you see at this crossover of the cloud, this has been a low point, and this has been a low point. So Ichimoku, if you look at it can show you very clear sort of change in market structure in the future. Okay. So for indication, right, you actually see that this is a very key. So if, for example, we were only to look at this area and we saw a key indication, this would be a level which we observe in alignment with our graphical swing lows to whether to buy in and ride with the trend upwards to a positive green trend. So this is how, okay. So, okay, so how we analyze gold is we look at the bigger picture first. We look at the monthly, and then you can see that it's a very strong uptrend here. And for the monthly Ichimoku, even it's saying that there is a potential fall, but overall the trend is more green. So we go to the weekly, and you can see that price is very above the green cloud. Okay. And if you are a swing trader, okay, let us look at them. Okay. Is a beginning. So price has actually transcended into this red cloud for a small pullback. It went in, it's a very thin cloud, as I mentioned. The thickness and the thinness of the Kumo matters more to show how strong the uptrend or the lower trend is. And you can see that because the clouds are very thin, it's very easy for the price to actually just test it and go bounce up or bounce down. So if it's a thin cloud, I wouldn't rely on it that much to tell the market structure. So you can see that at crossovers here, this is actually a very good indicate. This is a very good entry point. So if you enter by here, and then of course you have to connect it to your graphical levels. Previously, if you actually write the cloud up, this would have been a very good profit level from here to here. Okay. Okay, so previously. Okay, so if I'm looking at oil on the 4-hour chart, what I'll do is firstly, I'll find key levels to place my place levels at. So this is a recent high. Market structure is obviously on an upward trend, and we can draw a bullish trend line here that touches it quite a number of times. Bullish trend line, okay. So you see price actually respects this trend line a lot. It tested it, and then it was a bullish, and then tested here, and it tested here. It went a bit down towards our cloud, but it still respects the trend line and bounced, tested and bounced. Okay, of course, graphical level, this is a very high historical, not historical, but this was a recent very swing high. So when price reaches that level, it tends to go down, and the clouds are actually indicating that it's going to be a bullish momentum. Of course, from the markets these days, we cannot be sure, but if we draw a Fibonacci level, okay, Fibonacci retracement, we can see that price has reached the 88%. Price actually tested at this level. So when price reaches a key level, it will actually either stay for a period of time, test it previously, test it here, and it will go down or actually go up. So if this bullish trend line is still in line, we can foresee a potential entry, perhaps at this level where the support is actually within our Ichimoku cloud support. So we can forecast an entry here. And then if price goes down, bounce off the trend line, then we can actually forecast a take profit. At this level. Oh, this can be changed. Let me take profit. Okay. So this can be a level which you can observe. You want to look at oil. But as with the uncertainties in markets these days, I would say that you should observe whether it tests this bullish ascending trend line support first, and also if it doesn't go further down before actually deciding to go in and ride the trend long upwards. So Louis, I hope it answers your question. So remember, I think you asked me about whether there's a short pullback. So this was the pullback. But if you are a swing trader, a longer trader, I think in general, when we see the monthly, the weekly, the daily, we observe more of a bullish momentum there. Yeah. Okay, so yeah, anyone has more requests? I can do maybe say one more chart. Yoke or William, any of y'all have any requests? Or any of the newer people, you feel free to let me know what you guys really trade on in silver, Ryan. Ryan is a fan of silver. Yeah, with the uncertainty of markets, take what I said, what I presented as reference. And this is not to advise you on your trading, but if it helps in maybe say your analysis, I'll be very glad to. Yeah, so silver. Usman, okay, I'll do Elias. I think there's only time for maybe say one chart, but I'll be here on Friday for 11:30 for the analysis part, tech analysis. So I'll keep that in mind, Elias and Usman, for your euro, pound, and pound yen. And I'll actually do the analysis there if you guys will be there too. Okay, so for silver, I actually have a colleague who is very into silver too, Ryan. Don't know if you know Benson. Yeah, so as usual, how we do analysis is we go by the bigger time frame to observe the market charts. And we can see that silver for larger chart, when the larger time frame, okay, there's a bullish momentum here for larger time frame, okay, but it's only the monthly. So let us go down to the weekly. Okay, for weekly, okay, this is a key level I observe. You can see this line. Right now, actually, a price previously has tested this level times and actually respect this line. So we're actually at a key level right now. So we go in further and then let us go into the 4-hour charts. So keeping in mind, our long trend is actually going down, but we should zoom in. Okay. So right now from Ichimoku Cloud, we can tell that price is actually in a bearish momentum. And if I'm eyeballing it here, we can actually see that it might form a bearish channel. Okay, I don't know if I can adjust it. Okay, so for channels, usually if you want to do analysis, we try to aim for 4 touches. So let me try, see if this will go in. Okay, so in that case, price is not in a good channel. But we can see that here in August previously, the price has tested this level. So we know that price has a tendency to go in levels and react in historical levels. So you can see that we're at a bearish momentum, bearish market structure. The cloud is actually going down and it's not in the channel, but we can draw a bearish trend line here. Okay. Okay. So you see that price has tried to break through the clouds, but have not tested it in the resistance. So we know that this is actually a good resistance level because price did not manage to break it. Okay. So, and if we observe long term, okay, you can see that this is at the key level here. Okay. Okay. What I foresee maybe might happen is that price might test off this level, actually go towards this bearish trend line. Okay, I foresee maybe an entry take profit here. Okay, so this key level has been tested previously and then it actually went up and then so we are on a bearish momentum. It's not a very perfect trade because we're going against the momentum first of all. But if you really want to try along, this can be a potential entry and then take profit within our so here, and then if it breaks off, this can be a potential, but I would say don't go against the trend if it's not it's like the odds are not in your favor, and we always want to play safe if it comes to trading, right? So you can actually see that bearish trend line can bounce and test this, or if so, say, so we're looking at FIB levels, we see that it's actually 88%. Price might. So now we're actually close to the 127.2. If price goes lower, it might actually go to our next level, which is the 161.8. But that is a very, very far target to be. And as we know, the most recent target is actually here. Most recently bounce is actually here. So it's a higher chance, I would say, that it will bounce towards our bearish trend line. And after that, you can actually observe for next opportunities for trade. So, Ryan, I hope it helps in your understanding of silver. If you want to look at other indicators to sort of confirm or view stochastics, stochastics is actually saying that it's at a level where potential bounce can take place. Okay. Or if you guys would like a shorter form, let's see if there's any divergence. Okay, so the divergence has already formed. So you see the dip, right? There's a divergence and then there was a dip here. So I would say there's divergence already happened. So we wouldn't take that into consideration. But price for stochastics is actually at a point where rebounces mostly take place. So that is just for your consideration. Please actually do more research and also do your analysis before you place your trade in. So Ryan, I hope that answers your question. Yep, so I write down Euro Pound for Elias and Pound Yen for Usman next time. I hope you guys will tune in for Friday 11:30. Then we can continue our conversation there. And thank you guys so much for coming and listening in. If you guys have questions, you can actually PM the group webinar. And also for XM, today is the last day for Go Green promotion. So if you look at the promotion here, today is actually the last day. We have lucky draw and 15 prizes worth 25K. Wow, sounds very appealing to me too. So I'll register for it too. And so I'll be ending the webinar now. I'll see you guys soon. Bye, yo. Thanks for coming. Thank you always. Thank you, William. Thank you. Thank you, guys. I'll be ending the webinar. What's my stochastics? Okay, so that one was just the default. Usually for stochastics, right, I like to use 25. 25, 5 or 3. 5 is fine. So, and you can see here, this is what I personally like to use, but the default will be 1313. If you want to adjust it, 25, 26 is fine too. For 26 periods, it's a smoother line, it's clearer, and then you can use this if you want. Oh, Louis, the promo ends already. Oh, I'll let you know if there's a next promo, okay? Thank you, Ismail. I hope to see you next time too. Thank you, guys. Bye-bye.